Catalysts are everything for penny stocks. I'm going to talk to you about arguably the greatest catalyst that a penny stock can experience coming up. What's going on, guys? Welcome to Own the Chaos. My name is Brad and I trade over-the-counter penny stocks for a living. I love the volatility that it offers and just the crazy chaotic world and how I've been able to control it. And that's why I have this channel, and that's why I also have a community that I've built. It's called We Trade HQ. If you're interested in checking that out, it's absolutely free to join. The links are down in the description below. We have a community that is growing rapidly every day from people from all over the globe. So I encourage you to do that. Everybody's learning and growing and celebrating each other's success. So check that out. It's We Trade HQ. Again, links are in the description. So today we're talking about one of the greatest catalysts that a penny stock could experience. Now, I'm sure there's argument that can be made here, but we're talking about a reverse merger. So what is a reverse merger? What does that mean to a stock? What does that mean to you? So when you're talking about reverse mergers, the first thing that you probably should think about is an IPO, or initial public offering. You've probably heard this thrown around, especially if you're used to trading bigger board stocks, such as Apple and those kind of stocks. Probably one of the bigger ones most recently has been Snapchat. It's probably one of the more popular ones, I should say. Snapchat, Facebook, you've heard these go public is the other term that people like to throw around. So these are initial public offerings, and that is how a private company enters into a publicly traded sector. That is one of the toughest ways to be publicly traded, is go through an IPO type of scenario. For smaller private companies that are looking to be traded publicly, then they do what's called a reverse merger. And basically what that is, let's just say that I have a privately traded, or not privately traded, just a private company, and I want to go public with it. But I don't have the funds or the means to spend all of this money to do what a traditional IPO would do. Not only that, but I'd like to do it in kind of a relatively quick fashion. So there's an option that's called reverse merger. And so when I'm a public company, I'm looking for a quality shell company, which is a company that was traded, it still is being traded publicly on the market, but maybe has gone dormant. Maybe that company went out of business. They're not really doing anything. It's just there. And so there's steps to a reverse merger that a lot of us OTC traders look for a potential reverse merger. That first one's going to be reinstatement. It's a very long word when you're trying to write it all out there. So reinstatement is when a company may be dark or defunct on a Secretary of State. Lots of times the most common ones are going to be Nevada, Wyoming, Florida, even Delaware, because they have a lot of tax breaks for companies and stuff. So you'll see a lot of this on a Nevada Secretary of State. You just go to the Secretary of State website and you can view any potential reinstatements there. So reinstatement's the first step. All right, so after reinstatement, the next step that a company needs to do in order to reverse merge is to get their filings up to date. This will include their any previous quarterly filings that haven't been filed, and annual filings that haven't been filed, and then and get them all up to date. But that's not what's going to get them current yet. The next thing that comes up is an attorney letter. Okay, that's the next step. So they got reinstated, they get all their filings together, they get the attorney letter. Maybe if they don't have a transfer agent, they get their transfer agent to update the share structure as well. And then finally, after they get all of this stuff together, then they'll get current. It's not until they're current that they won't really let you know what the company is doing. Maybe sometimes you don't even know what company's merging into this company until after all this is done. Oftentimes you'll see a letter of intent that may come out prior to this, that maybe the company's merging into it, but most times, if you're a legitimate private company that wants to do everything the right way, you want to get yourself current, because if you start putting out press releases and such, you may be subject to a caveat emptor, which is never a good thing. I don't care what anybody tells you. When you get slapped with a caveat emptor, it does not mean that everything is okay. It almost always means that that stock is going to tank the next day. So when a company is behind on their filings and they start putting press releases out, that's when that's when they put themselves at greatest risk for a caveat emptor along those lines. Anyway, there's several reasons you'll get a caveat emptor, but that's one of them that certainly will get you slapped with one. After that though, once they're current, that's when you kind of know, okay, what's the story here? What are they doing? What direction is this company going into? Where are we going? So oftentimes once they get current, that's when the real catalyst comes out. Maybe they're getting into what's hot right now, a cannabis sector. Maybe they've already got things in the works. This is a private company that has millions of dollars of revenue, and now that they've got everything in order, that merge has happened, and boom, they've let everybody know what it is that they've been up to. Depending on what type of merger this may be, this could move a stock 100, 200, even 1,000% or more, depending on how big this private company is that's moving into a shell company to become public. So whenever I'm looking at my scanner and I see some unusual volume showing up on a particular ticker, and I start to do my due diligence and I discover that maybe the unusual volume is because of a reinstatement, that's what kind of gets me going a little bit to see what else is going on here, because maybe I'm looking at the beginnings of a reverse merger, which could mean major money. So this is just a basic explanation of what a reverse merger is, guys. Obviously there's a lot more to it than that. It's not all that simple, but this is the kind of steps that we're looking for when we're looking at one of the largest catalysts that could propel a penny stock and yield a ton of money. If you get in at the bottom of this, you get at the very beginning of this reverse merger type of play, it could really mean a lot of money. Not every reinstatement is going to lead to a reverse merger. There's plenty of reinstatements out there that for whatever reason maybe that reverse merger falls through, and so I don't want anybody to get the assumption that just because a reinstatement comes out automatically means money. No. There are instances where it just doesn't happen. But if in an instance that it does, it could seriously mean some major money and some major price movement within that particular stock. So I hope that was helpful today, guys. If it was, I certainly would appreciate a thumbs up. And if this is the first video you're ever watching on my channel and you want to see more, please hit that subscribe button as well. If you want to be a part of a great community of like-minded individuals who help each other learn and grow and celebrate each other's success, I highly encourage you to check out my free platform. It's called We Trade HQ. The link's down in the description below. If you trade anything other than penny stocks, it's still going to be a great community to be a part of. If you're trading options, big board stocks, futures, forex, cryptocurrencies, it does not matter, guys. No matter what you're trading within the market, We Trade HQ is the place for you. That's all for me, folks. As always, I will see you all before the bell, and B Smith is out.